The matter of the taxation of dividends has been reformed by the 2018 budget law, which equated the taxation of individuals not in the business regime who hold qualified or unqualified shareholdings with taxation at a fixed rate of 26%. In particular, in the case of dividends given by resident companies and deriving from qualified shareholdings, the taxation to be applied starting from 2019 depends on the recipient of dividends themselves. That could be a withholding tax as a 26% on the entire tax base for individuals not in the business regime. The individual taxpayer must not report anything in the tax return, since in this case it is the company itself that makes and pays the withholding tax. The tax base is equal to 58% for individuals operating under a business regime as sole proprietorships and partnerships. In this case, the ordinary IRPEF rates will be applied to this taxable base. A tax base of 5%, so 95% exemption for joint stock companies. For dividends distributed by resident companies, and this time deriving from unqualified shareholdings, the taxation to be applied always depends on the recipient of dividends themselves. That could be withholding tax as a tax of 26% for individuals who do not have a VAT number. The individual taxpayer must not report anything in a tax return, since in this case it is the company itself that makes and pays the withholding tax. However, the withholding tax is 15% tax for individuals who do not have a VAT number resident abroad. Tax base of 58% for individuals with VAT numbers and partnerships. The ordinary IRPEF rates will be applied to this taxable base. Tax base of 5%, so 95% exemption for joint stock companies. Attention! In this case, the exemption is total if the company in question has opted for transparency regime, as known as IRPEF taxation directly by the shareholders.